Viewers, Mike Martin's here, Mike Martin's channel. I got a really good article I want to share with you guys. It's happening every English-speaking country. I'm finding news from everywhere that things are changing really fast in the housing market. Things are changing extremely fast in the housing market. Now listen to this. This is from the province, okay guys? 20% more mortgages are being denied by big banks, sending borrowers down the credit ladder. So if you got good credit, if you just don't make enough, I think you don't qualify with the new stress test. Stricter mortgage rules sending borrowers towards more riskier lenders that are out of the regulator's purview. So remember this shadow lending, shadow mortgages I told you guys about? I made a couple of videos about it actually. It's worse. You get to a point where just don't buy. If you're going to get into this desperation, it's not worth it, guys. If you're going to start paying dangerous, going into danger zone with rates, not only that, never mind that, there's all these little hidden cautionary things in there that you don't know about. So if your lawyer's not good at reading paperwork and he misses something, they could do whatever the heck they want once they got your signature on that, and they basically have debt to rights on your mortgage. So you got to be really careful with this. You got to be super careful with those kind of shady promises and making your home equity work for you type people. Just watch out for that kind of stuff. So here goes. Stricter mortgage rules are sending borrowers towards more riskier lenders that are out of regulatory's purview. Toronto mortgage brokers say the borrower rejection rate from the large banks and traditional monoline, mortgage lenders. Why did you say mainstream? Traditional mainstream mortgage lenders has gone up as much as 20% after Canada's banking regulator imposed new stress tests for home buyers who don't need mortgage insurance. As a result, alternative lenders are seeing an uptick in business as brokers increasingly direct home buyers toward buying options that are beyond the reach of the Office of the Superintendent of Financial Institutions' newly enacted tighter lending requirements. So here's the deal. This is what happened down in South Florida. I remember this in just the beginning of 2007. A lot of people are going with these jumbo loans and Mickey Mouse loans and getting themselves put in these predicaments and positions where the rates seem attractive at first, and then the second the rates go up, or the second that they got you. They got you by the tennis balls, right? So what do? I mean, they own you. It's a death grip. It's basically a mortgage is a death grip is what it is. And for those that know what I'm talking about. Clients who did not meet the bar are turning to private lenders, mortgages, investments, corporations, MICs, and credit unions, which is provincially regulated and not required to implement the stress test, said Carmen Campernago, president of Pro Funds Mortgages in Burlington, Ontario. So this is something you guys need to be really careful about. I'm just stressing, don't take my advice. Obviously, you're going to seek professional advice. Remember, guys, buying a home is one of the most biggest investments you'll ever make in your lifetime. And you got to make sure it's right. It's going to be it's an asset, right? And it's an asset for people that want to raise a family and live and grow. It's a commodity for people that want to buy and flip. If you're buying and flipping, then this video is not for you. This has nothing to do. This has to do with the common Canadian proper or Australian proper or Irish proper that work hard, send their kids to school, that have come from all over the world to make their countries their home, like to make Canada their home, basically, make the US their home, to make Ireland their home or Australia their home, and basically building a future for their family and their children. You know what I'm saying? So this is it. This is how it started. This is exactly how the pattern started down in South Florida. I remember down in South Florida, it was so bad during the height. I still remember this. People were paying $20,000, $30,000 to move into someone's pre-built units, to buy someone's pre-built units. They're not selling them the units. They're selling them the spot in line to be able to buy the pre-built units. That's how out of control it got when it was buying, when it went to the height in Florida. I still remember the height was crazy. People paid, one guy paid $31,000 to get a position in line in one of the condos. He didn't buy the condo. He just bought the person's, like, ticket that they had. I heard stories like that out of Brampton, Ontario, where people that got there early received numbers so they could go and buy, and then they were calling out numbers, and people were giving $10,000, $20,000 for a number. Just to hear, I'll give you 20 grand for this number so I could go ahead of you. It's like, holy crap, are you friggin' serious? So this is what happened. Everything heated up so much. Investors heated up the market. Everything got heated. And look what's happening now. Everyone's being pushed down the credit ladder. Now, it's kind of the bank's fault because the banks had to put these measures and these stress tests, they had to be put in place. They thought that this 1% or 0% interest was going to go forever. The party comes to an end, people, and this is what we see here that's happening. And this is it. The mainstream banks are saying, hey, goodbye. Go to shadow banking or whatever, or getting your home equity work for you. Those kind of places. So I want to know what you guys think. I want to know. Comment below. Have you been hearing stories on the ground? Comment below. I'd like to know. I got so many stories from all the places I've lived and watching housing bubbles go up and down like a roller coaster. And that's why I've never invested in housing markets. I invested in stocks. Yeah, the stocks dipped and I bought. And people are like, oh, people are telling me, yeah, your portfolio should have taken a hit in the last 2 days. I'm like, yeah, and then I bought. That's how it works, you know? 10,000 becomes 5,000, and then 5,000 becomes 20. That's just how it works in the whole market, the whole business market. That's just how it works. The markets work like that. That's how housing works. One day it's this, and one day it's that. But because our housing is tied to our economy, it's making it a lot more complicated for it to crash. Because remember what I said, guys. Markets crash in hours. You saw that in the last 2 days in the stock market. And economies take a long time to crash. So let's see what happens with the housing market because it's so heavily tied to our economy. Let's see what happens, guys. Let me know what you guys think. Comment below if you have any stories. Thanks for watching.